Hey, good morning, everyone. I am Jamal Brown. I am with the tax department here at CTR, and thank you for attending our 2023 year-end webinar. Um, Hopefully, everybody can see everything. We should just see the webinar on your screen. The team should be going. So thank you for joining us. All participants will be muted during the webinar. Any of you who have attended our webinar in previous years, you may notice some changes. One is that we're using Teams for the webinar. Previously, we were using Zoom, and also we are now doing a Q&A. So feel free to type your questions in Teams. You can use the Q&A button. We have some team members on
Hey,
hand that,
Jamal, I'm so
yes,
sorry to
yeah.
interrupt. Um, do you mind stopping sharing your screen and sharing again? Some of us
Oh,
are getting the Teams box instead of the webinar
oh,
presentation.
wow. Okay, thank you. Give
Sure.
me 1 second. Okay,
Success. Bingo.
good. Okay. All right. Thanks,
Thank you.
everyone. Thanks, Kara. And thanks, everyone, for letting me know. This is our second slide, so you haven't missed much. Um, as I mentioned, thank you for joining us. We will have everyone muted during the webinar. As I was mentioning, feel free to type your questions in Teams. You can use the Q&A button. The chat button itself is disabled, so you'll be using Q&A for questions and answers. We do have some team members on hand that are monitoring the Q&A section, so they will answer any questions as time permits. And this will be through the end of the webinar. So I'll continue with our slides, but the team members will be monitoring the Q&A section. We will be providing a Q&A sheet for all answers, and this will be sent to you along with the presentation and the recording. And if if after the webinar, if you have some questions that you did not get to ask, then please reach out to your support representative if you have anything additional or need any clarification. And this is per usual. You can reach out to them and then they'll forward your questions to the appropriate party. So first we are covering is our holiday schedule. So we will be closed on Thursday, November 23rd for Thanksgiving, and we will also be closed on Friday, November 24th, the day after. If you normally process your payrolls on Thursday or Friday, as in you're in iSolved and you click the submit button to submit your payroll on those days, then please submit your payroll by Wednesday, November 22nd at 11 a.m. Eastern. Our ACH files will be transmitted as normal on Friday because Friday is not a banking holiday. But as long as you submit your payroll on, just ensure that you submit your payroll on Wednesday, especially if you have a pay date in the following week, early in the following week, like a Monday or a Tuesday. For Christmas, we will be closed Christmas Day itself, Monday, December 25th. If you normally process your payroll on a Monday, then please submit your payroll on the Friday beforehand, December 22nd. And we will be transmitting ACH files as normal on that Friday. And then the same situation with New Year's. We're going to be closed Monday, New Year's Day, January 1st. And again, if you process your payroll normally on a Monday, then please instead submit it on the Friday beforehand, December 29th. So how is your payroll affected due to the holiday schedule? And we just kind of touched on this on the previous slide. If your processing or check date falls on Christmas or New Year's Day itself, please refer to your payroll run schedule to see a specific impact to your company. Contact your customer support representative if you want to use a different pay date prior to entering the payroll data. So before you start entering people's hours or check amounts or bonus pay, etc., please reach out to your payroll representative if you want to use a different pay date. If you attempt to process your payroll after your scheduled processing date, the system may prohibit you from doing so, and the payroll may need to be pushed through. As a result, as such, please make arrangements with your payroll support representative prior to the holiday so that we can be assured your payroll is timely processed. And this is basically the system will prevent you from running your payroll at the last minute. For example, if it's a Monday and you're trying to submit your payroll for a Tuesday check date, you're going to have to reach out to your support representative and possibly make other arrangements. Failure to process by the established deadlines may result in additional processing fees. Going paperless, we ask that our clients that receive a payroll package to consider the following options as we navigate through the holiday season. Paperless, signing up for employee self service. This will allow employees to access their direct deposit vouchers online. This is a win for everyone. It can reduce shipping fees or, in some cases, eliminate them completely. Also, in general, encouraging your employees to sign up for direct deposit. This is another win for the employees as it's convenient. They don't have to make a trip to the bank, putting more time back in their day. It also guarantees that they are paid on time. And if the employee does not have a traditional bank account, then you can speak with your customer support representative for information on a pay card option instead. These options are easy to implement. And if you'd like to hear more about them, then feel free to reach out and we can go from there.
Hey, Jamal, I think you accidentally placed yourself on mute.
I am so sorry. I just moved something on my screen. And thank you so much.
Sure.
So, as I was mentioning with this slide, the federal unemployment credit reduction, otherwise the tax is known as FUTA, states normally receive a credit reduction to their FUTA tax rate, where employers only need to pay a 0.6% rate on employee wages up to a $7,000 wage base. So once each employee is paid $7,000 for the calendar year, you no longer typically have to pay the 0.6% rate. Now, with this, many states borrowed federal funds to pay for unemployment benefits. And since they did not repay their loans to the government, uh, their food tax credit is being reduced. And sometimes this wording is confusing, saying it's a tax credit, because basically you're going to have to pay more for the tax. It's probably easier to think of it that way. Um, the credit amount is being lowered, so you're not having as large a credit. So ultimately, you're going to be paying more for this tax this year. So the specific states that are affected by this for year 2023 are California, New York, and the U.S. Virgin Islands. So if you have any employees who work in these states, as in they are subject to the state's SUI taxes. So, for example, California SUI or New York SUI, your company will need to pay additional food taxes due to this credit reduction. This was just announced earlier this week, so this is pretty much hot off the presses. So any employees that are subject to California SUI or New York SUI are going to be paying an additional, employers will need to pay an additional 0.6% tax on those employee wages in those states, except for the U.S. Virgin Islands, which we'll cover in a moment. So this is still up to the $7,000 wage base. And if you do the math, basically you're going to be paying an additional $42 for each employee in those states. And this is on top of the $42 from the math in this first bullet point. So grand total, you're going to be paying $84 for employees that are subject to California and New York SUI. And it's again $84 grand total towards the FUTA, the federal unemployment tax. If you have employees in the U.S. Virgin Islands, they actually have a huge jump. They're paying an additional 3.9% on top of this, typical 0.6%. So they're paying much more. The additional FUTA taxes will be collected sometime in December. We'll keep you posted on the scheduling. Last year, we collected, the iSolve was configured to begin collecting the taxes sometime on or after December the 2nd, if I recall correctly. So it may still be around this time again this year, but we will keep you posted on when this is happening. Be advised that this could cause a significant increase in your payroll tax collection due to the additional tax liability. And again, if you have an idea of how many California or New York employees you have, you could be paying an additional $42 on each of them, depending on, if they've hit the $7,000 wage base. So keep that in mind. The payroll summary report will have a separate line item showing the additional FUTA tax being collected. So once the update is rolled out into iSolved and we're beginning to do the additional collections, you will see the line item explaining this. And the credit reduction could potentially happen again in coming years if the states do not repay their loan to the government. So California and New York were also on the list last year, and they haven't repaid their loan. So and U.S. Virgin Island was also on the list last year. So all three of them are continuing with this credit reduction this year. So important to remember, this primarily covers are deadlines for you to submit your payrolls so that we can process everything timely for the fourth quarter and annual tax returns. So all adjustments made after Friday, December 29th may result in penalties from tax agencies, and we may charge additional fees for correcting or revising returns. So this is our deadline for you to enter any 2023 information, so that mainly we can get everything paid to a specific agency so that you don't face any penalties. CTR will begin processing quarterly returns and printing W-2s on Saturday, January the 6th. All payroll runs, adjustments, and changes must be processed by Friday, January 5th, 2024. Please reach out to your customer support representative for assistance. So again, our deadline, Friday the 29th, is really, you want to be safe so that if you have changes that add tax liability, we can get those to whatever agencies timely. There is a smaller window up until Friday, January the 5th. But at that point, if you're doing retroactive changes for 2023, especially if you're adding tax liability, you may face penalties from different tax agencies. Taxes can be so taxing. We are happy to assist our clients whenever possible, but we cannot advise you on tax matters. Tax decisions need to be made in consultation with your company accountant, CPA, or tax attorney. And if you have a special item that requires special taxation, we'll configure the pay item according to your direction within the bounds of the software. Did you hire a new employee in 2023, which I'm sure many of you have? If so, you should verify their social security number, their full legal name. So it's best to do this by looking at their social security card and making sure that matches. The employee's address you'll also want to verify. This should be a physical address, as some tax agencies do not allow PO box addresses. The PO box number can be reported online too, but for example, here in Pennsylvania, When it comes to local taxes, we file quarterly local tax returns to the various local tax authorities, and pretty much all of them do not like a PO box for an employee's home address because the local taxes are based on where the employee lives. And when they see a PO box, that's obviously not where they live. So that'll cause issues with the return. Sometimes it'll get rejected, or the agency will send a notice and say, "Hey, we need an actual home address for this person." So we always advise, not using a PO box address for the employee's home address. Also, ITNs, which are individual taxpayer numbers. Basically, you can identify them as social security numbers beginning with a nine. These should not be accepted. And this is per the IRS itself. They specifically say they should not be accepted in place of an SSN for an employee identification or for work. So if someone provides you with an ITN, that does not mean that they can work in the United States. It's mainly identification for other purposes. Anyone with an ITN, they should immediately work on getting an actual SSN. We've seen this with various tax agencies where if we're filing an unemployment return every quarter, if there's a person with an ITN in place of an SSN, the tax return will either one get rejected or the agency will penalize you, the employer, for not having a valid SSN for that person. And also, you run the risk of there being issues with the W 2 filings if the person does not have a valid SSN. So keep that in mind. We're seeing more agencies kind of clamp down on this. So it's definitely advised that you stay on top of these employees and ensure that they get a valid SSN. If you do have someone with an ITN in the system right now, and you make a change to update them to a valid SSN, please let your support representative know. And we say that because we may need to perform amendments for prior tax returns to update their SSN, especially when it comes to the unemployment returns. Because if, say, John Doe had a ITN for the first 2 quarters of this year, and then you updated him to an actual SSN for the remaining 2 quarters, the agency won't know that's the same person. If we don't perform an amendment, the agency will think they're two different employees and will think they have two different wage bases and will want additional taxes from you. So it is important that we make those the amended with it's important that we amend the unemployment tax returns to get that corrected.
Hey Jamal, you muted yourself again.
Oh my gosh. Thank you so much. Sorry about that. Employee information. After each payroll, the following report will identify employee tax items that need attention. This is the exception report. And many of you already review this, and we definitely appreciate it. This will tell you if there's any tax items that, um, like we say, need attention or, may need to be fixed. Now, you can review this report after your payroll has been processed, but we also strongly encourage that you review this report before you process your payroll as well. So this path here is showing you where you can, view it afterwards. But before you process your payroll, when you go through the normal preview process, we always say to review this report. Also review your payroll summary, which many of you do already, and also review your payroll register as well. If you see anything that jumps out or seems odd on the exception report, then please do reach out to your support rep. It's better for us to review it now and try to, and fix any potential issues versus it letting it continue into the future and then having to do amendments, which could be costly. So state unemployment rate changes. When you receive a rate notice from any state, please send it to us promptly. These notices can be sent by email to your support representative or to us by fax. And to expedite the handling of the notices sent by email, please use a subject line such as 2024, your state abbreviation such as PA, OH, etc., SUI rate for your company ID. The rate on file for your company determines the amount impounded for this tax. If the rate is not provided until sometime after its effective date, this will have a large impact since the first dollars earned in the year will all be subject to SUI tax. So basically, ideally, we want to have this rate set up and in place before you run your first payroll of the year. Now, sometimes agencies, frankly, don't send these rates until the middle of January or February, or it's all over the board. Some of them have already been sending the new 2024 rates, so we're getting those updated now in preparation for the new year. These agencies typically do not send the rates to CTR, so we do rely on all of you to send the rates over to us so that we can get it updated. If there's situations, for example, where we don't have your newest rate for 2024, we continue using the previous rate that we have in the system. And sometimes that can cause penalties because your newest 2024 rate is higher than your previous rate. So keep that in mind as well. That's obviously the most important thing, just keeping you up to date and compliant and making sure we're collecting and paying the correct tax rate. Finally, our secure fax number is here in case you want to fax a notice to us instead of emailing it to your support representative. So bonuses and special pay runs. These payrolls must be processed before this December 29th deadline that we mentioned on the previous slides. Please request and process as early as possible, especially if this will be done on a separate payroll run and not part of your regular payroll run. And some points to consider with these bonus and special runs: if the total taxes for your special or bonus run will be larger than your normal tax amount, we may need to make special arrangements to fund those taxes. And this, frankly, kind of coincides with our point down here. If these amounts exceed your approved ACH limit, we may ask that you wire funds or provide proof of funds for these bonus runs. Another point to consider is, will you use a regular tax calculation for these pays, or will the supplemental federal and or state rates be used? Will these pays be separated from regularly scheduled paychecks? Meaning that, are you going to have, if you are going to pay this bonus on your regularly scheduled payroll, do you still want the bonus to be on the same check entry as a person's normal pay, check or direct deposit entry as a person's normal pay, or do you want to create a separate entry just for the bonus itself? Um, will you allow these to be paid via direct deposit, or do you want them to be issued as paper checks? What about deductions like your 401k, 403b, retirement, etc.? Will those be allowed on the bonus? If so, remember the varying withholding just for this pay. Remember that trying to vary the withholding just for this pay may be difficult. And also, will there be any special delivery instructions for paper checks in particular? So if we are issuing these bonus checks, do you have anything out of the usual for delivering them? So third party sick pay, many of you report this, provide this information to us during the course of the year. So the timing for this is submitting it before the last pay, on or before the last payroll of the year. Adding the sick pay amounts after January 1st could delay productions of your W-2 forms and or impact your tax reporting. So some things to consider is who is responsible for reporting this on the W-2. Do you as an employer, meaning that the W-2s produced by CTR will include the third party sick pay, or is your provider going to provide a separate W-2 with the third party sick pay? Another point is, did the employee pay any portion of the cost or premium either as a deduction or as a tax? And has the employee been receiving sick pay for more than 6 months? In special pay items, taxable fringe benefits, these typically come up at the end of the year. So, we this is around the time, this is the time where we're dealing with this. If you provide group term life insurance and coverage in excess of $50,000 or any fringe benefits to report for any employees, this should be processed in the employee's pay, as is, it should be included on an actual regular pay that the employee is receiving. Group term life and other fringe benefits should be added either with or before the last pay of the year to allow the employee to cover the taxes. There need to be earnings to be processed for taxing calculations. So many of these benefits, the employee has to pay an employee portion of the taxes for these benefits. And that's why we stress making sure they're included on an actual regular paycheck. If your employees are terminated with no live pay to process, then please reach out to your customer support representative for instructions. So, say you have someone that was terminated in March of this year, but now it's December, and you say, "Oh, we need to add personal use of auto or group term life or some other type of benefit." Please reach out to your support representative. And this kind of transitions into our points for consideration. If the employee is not receiving any more pays and this needs to be added, how will you cover the employee taxes? Frankly, you are going to cover the employee taxes, especially if they've been terminated or they've already received their last pay of the year. Again, that's why we stress that these are on a regular check that the employee receives so that they can pay their portion. If they're not, and we're just creating these entries in the system, there are many employee taxes that are mandatory, such as FICA taxes, the employee's Social Security and Medicare. You may end up having to cover or pay those taxes to the agency. Another one is Ohio local taxes. Even though this is something that comes out of the employee's paycheck, if the tax is underpaid, the agency actually comes after you, the employer, and they want the money from you. So again, this is why we stress make sure these are part of an employee's normal pay. Another point for consideration: are you giving out gift cards or other items that have more than a de minimis value? So gift cards are also a taxable fringe benefit. And you can reach out to your support representative for setting up those. Also, do owners, managers, or key employees need to be taxed on special earnings received? And for any of the above, consult your company accountant or tax advisor to provide specific directions on what taxes apply. We did advise this on an earlier slide. Sufficient advance notice needs to be given to us to make sure we are complying with those directions. So S corp owner's health insurance. This is also a common item we see being reported at the end of the year. Is your company a subchapter S corporation? Do you pay the cost of health insurance for anyone who owns 2% or more of the corporation? If you answered yes to these above, then consult with your accountant or tax advisor. Provide to us any amounts that need to be added and which taxes apply before the final payroll of the year. There are differences among states regarding the taxability of these items. Reporting these items after January 1st could delay production of your W-2 and also impact your tax reporting. This is a pretty common question as well. The W-2 does not match the final pay stub. It probably should not match depending on what areas of the pay stub you're looking at. And here are some common reasons. You probably have pre-tax deductions that reduce taxable wages. Many pre-tax deductions such as Section 125 health cafeteria plans, they don't even show up on the W-2 at all. So that's one thing to keep in mind. Not all of them, but many of them do not. You may have earnings codes like reimbursements that are not taxable, and the tax treatment of earnings codes or deductions may not be the same for your state taxes or local taxes as they are for federal. So help, my W-2 does not match my final pay stub. Here's how to reconcile. You'll want to go to your employee pay history screen and select their final pay of the year. And in the taxes section of the pay stub, you'll see the year-to-date wages that are used to create the W-2 form. So these year-to-date wages here, these are the taxable wages. They're not the gross. So the taxable wages are basically, well, the wages you're being taxed on, but these are typically the gross wages being reduced by some type of pre-tax plan, such as a 401k or a pre-tax health insurance, etc. These should more closely match what you're seeing in the wage boxes of the W-2. Now, sometimes they may not match in the case of maybe we've done some kind of background adjustment where we're fixing something for an employee. If you see a situation where it does not match, or if you have any questions, feel free to reach out. But the vast majority of the time, these year to date wages should match the W-2. For reconciling employees' W-2, iSolved has a W-2 reconciliation report. This can be run at any time of the year, but it's most useful after the final payroll of the year. This is a path to find it, reporting year-end reports on demand, and then you will choose the W-2 reconciliation summary. This report is very similar to a W-3 form with some additional detail. It gives all that information, plus it gives you the number of W-2 forms per state income tax. So if you have some employees in Pennsylvania, it'll say X amount of W-2s for Pennsylvania. If you have some in Ohio, it'll say X amount for Ohio, and so on. It gives a full breakdown of local tax, federal wages, and tax withheld, and some other information too. Paperless forms. We have a feature that offers your employees to opt out of receiving all paper year-end tax forms, such basically the W-2s, ACA, and 1099 forms. When this feature is turned on for your company, employees will be presented the option to opt out of paper year-end forms the next time they log into their employee self-service. So by default, employees do receive paper copies, but you know, again, this is an option for them to skip the paper copy and only receive an electronic version, which they'll log in and retrieve themselves. Employees who opt out will be able to retrieve their copy. And this is a path forward in iSolved, employee self-service, W-2, ACA, 1099 forms. We will be posting the electronic copies of these forms on January 5th, 2024. Now, this is a tentative date and subject to change, but this is what we have so far. We recently sent communication about this. The email came from Kara, and it basically explained the above, just stating that they're paperless options for these forms. So if you want to verify that this feature is active for your company and your employees are participating in it, first, if you want the feature turned on, you must notify us before your last payroll of the year. Many employers have already chose to activate this feature with their iSolve setting and have notified us. If you're unsure whether you currently have this feature activated and whether employees are, have opted in or opted out, then you can navigate to this path. It's reporting, client reports, electronic tax delivery form status. Once you open the report, there's a few date fields. And if you see a date field that's empty for all employees, then you are not offering the service or no employees have opted out of receiving the paper copies. If you do see a date field next to the name of some employees, that means that the employees have opted out of receiving paper forms and they will get electronic forms only. Terminated employees will always receive paper forms, so there's no opting out option for them. They'll always get paper. Also, this comes up pretty often, reminding employees who have opted out of paper forms. So when you get to passing W-2s out, you may have some employees asking, well, where's mine at? And this is this will assist you in seeing that the person whether the person opted out or not. You may have employees who forgot they opted out of receiving the forms. We recommend that it's good practice to send a quick email notifying employees where they may retrieve their electronic year-end forms in their employee portal. And we just covered this on a previous slide. This is a path: employee self-service, W-2, ACA 1099 forms. And we say employer here also because you as an employer can actually go to the employee in iSolved and go to this path if you want to print this form for them. So employee and employers can use this path. Now, for you as an employer, if you want a PDF copy of all the W-2s and 1099s and ACA, etc., this is a path that you would use. Go to reporting, year-end report archives, then select the 1099 miscellaneous copy C, or the ACA forms if you need those, or W-2 copy D employer. Also, I'll add there's a 1099 NEC as well, which is replaced the 1099 miscellaneous, not fully, but with some items in previous years. So that's another potential option for you to review. These will provide PDF version of all employer copies of tax form for your employer records. So year-end tax forms electronic delivery, the year-end report archive. Employees that are not receiving a printed W-2 will not appear in the pressure sealed report in the year-end report archive. So if you go to the year-end report archive path that we just mentioned, and you'll see a file called W-2 pressured sealed, that is literally for W-2s that are printed. So if someone opted out of having their W-2 printed, they are not going to be included in this pressure shield file. You're only going to see, again, W-2s that for people that got printed copies. The W-2 copy D, which I also covered on the previous slide, the employer copy D will include everyone, including people who have opted out. And this is what you'll see. This picture is what you'll see for a person who opted out and instead is only getting the electronic copy. It'll have this ESS copy watermark on the form itself. So really, it's safest and best to just go to W-2 copy D so that you can see everyone in case you're researching or questioning something. Masking Social Security numbers on year-end forms. This began for sure last year and maybe a prior year. In order to protect employee personal information, the IRS is now allowing employers to mask the Social Security number on employee year-end forms, including W-2s, 1099s, and 1095-C forms. This is a preview of it down here. It'll mask the majority and only display the last four digits. If you would like to add the masking feature to your year-end forms, then please contact your customer support representative before you process your last regular payroll of 2023. The employer copies of the reports will not be masked. So this masking will only take place on the employee copies. This is an all or nothing feature, so you can't pick and choose some employees to have their numbers masked and some not. So once you opt for this, it'll affect everyone for the W-2, 1099, and ACA forms. So year-end tax forms, electronic delivery. The ACA forms, this is similar to what we just covered with the W-2. There will be an ESS copy watermark for the if someone opted out of receiving a paper copy of the ACA form, and this is an example of that. TurboTax. This is the second year we're doing this. It began last year. So this is a free service. There's no charge for it. Employees that utilize TurboTax will be able to easily import their W-2 during the tax filing process. There's nothing you need to do for this integration except make your employees aware that they can do the import if they choose. This service is available for all clients. Once the employee is on the TurboTax website, they need to consent to have TurboTax pull their W-2 information. So no data is provided to TurboTax without the employee's consent. So if the employee has concerns about that, they will definitely go through a consent process to allow TurboTax to pull their information. There is a YouTube video for a demonstration on this. This is a link, and once if you download this webinar, you can click the link and see the demonstration. Approving ACA forms. Once you finish previewing your ACA form, scroll through all the pages to the end and make sure there's no errors. You must approve your forms in iSolved. This is a path or where you would go to approve it. You can preview or approve your forms on the ACA forms approval screen displayed below. Approving the forms will commit the forms to the year-end batch print for Service Bureau printing and filing. If you fail to approve your forms in iSolve, CTR will not be able to produce or file your ACA forms. So it's crucial that you complete this final step. Also note that ACA forms will be printed and shipped separately from W-2s. In some prior years, we used to print and ship the W-2s both with the ACA forms in the same package, but we are no longer doing this. It's to help avoid any potential delays. And as a reminder, the ACA forms must be approved by January the 9th. This is our year-end checklist. Now, this is part of our year-end planning guide, which we post every year. The year-end planning guide covers most of the discussion here in the webinar, plus some additional items. This is a checklist that you'll find right at the end of the guide, going over some due dates, some crucial dates, and providing you with a column where you can mark this off. You don't need to turn this into us. This is for your own records, but these are just points to review and a date completed column for you to keep up with this on your end. The year-end guide itself, which will include this list, it will be available as a handout, and we will also post it under the quick links on your client landing page in iSolved. And I'll be covering this in the next slide. We want to remind you of our year-end resource webpage, which can be found here. This is a path for it. The page covers a variety of year-end deadlines as well as providing guides, including the year-end guide I just mentioned, checklists, and recorded webinars. So I'm going to click this just to give a quick preview. So here is our year-end resource page. And as you can see from the prior screenshot, we have some of our deadlines posted here. This we will be adding to this once the webinar is complete. Oh yeah, okay, actually we have it here already. The last I was on the page, we were still awaiting an upload for the presentation. So that's here. Our ACA form preview guide, checklist, our ACA webinar presentation, year-end planning guide, and our announcement about the paperless electronic W-2s and ACA 1099, etc. We also provide prior year-end resources in case you want to revisit those for any reason. But this is a very helpful page that we encourage you guys to check out. And that is it. We are at the end of the webinar. So you may have been already utilizing the Q&A function in Teams. So please continue to use that. We will keep that open until our official conclusion at 12 p.m. Eastern, so about 15 minutes from now. And as I mentioned earlier, if you have any questions that you didn't think to ask during this time, please reach out to your customer support person and they will forward it to the appropriate party and we'll get back to you. This is where you can find that information if you aren't already aware. Your client landing page will have a section for your account representative, and these are our phone numbers, and the email for your support representative will be on that page. So thank you for everyone who's attended. If you don't have any further questions, then we wish you a great day and enjoy the upcoming holidays. And I will keep this screen open. I'll cease with our presentation, but we will continue to monitor these questions for the next 15 minutes, and then we will conclude everything officially. So thank you very much, everyone.
Thanks, Jamal. This is
Yep.
Kara. I just wanted to tackle a couple questions that were just posted. Can we get a copy of the slides? Will we receive the presentation and email? Yes to both. So the year-end page has the presentation already. And as soon as we conclude the webinar, we'll get the recording, and that will also be posted to the year-end page. And anyone that registered for the webinar will receive an email with both the presentation, the recording, as well as the year-end planning guide.
Thanks, Kara.
Sure. Looks like we have a couple more questions. Shauna's going to tackle Val's question here, and then we'll answer these other ones. So if you're still on, feel free to post a question if you have one. Hey, Jamal, it looks like we have covered all the questions in the chat, and we
Mhm.
can include those when we send out the information.
All right. Um, so we will close up shop because yes, it doesn't look like we have any more questions coming in. So for any of you still attending, thanks again for attending. And as we mentioned, if you have any other questions that you didn't get a chance to ask, please do reach out to your customer support representative and they will forward it and we will go from there. So thanks very much, everyone.
Thanks, Jamal.
Thank you.